Well, I think it's not surprising that on a weak PMI data, the market PMI for China dipping below 50 for the first time since July last year at 49.6. That's suggesting that the weakness we saw going through the fourth quarter of last year has continued into the new year. So I think some response from the markets is not surprising. But does it mean that there's a danger of hard landing fears coming back? I would be very much surprised, because I think what we learned last year was that the Chinese authorities, by turning the tap on and off, by introducing selective measures, mini fiscal packages, can actually support demand when they want to. So if the Chinese economy does start to slow significantly in the first quarter, and of course that would be negative for markets, that would cause investors to be quite jittery, I'm quite confident that the authorities have enough firepower to reverse that. I think the key for me is that any tightness we see in the Chinese money markets, in interbank, in gradual deceleration in total credit, total social financing, is being done at the behest of the authorities. They always have the ability to reverse that, but that of course could lead to a bumpy ride for China markets with some spillover to the other Asian markets. Well, India still looks good on long-term comparisons, price to book. It's still on a reasonable discount. And it was really problems, it was outflows in the debt markets that caused a lot of the mayhem that spilt over to equities last summer. And now, of course, we're seeing some quite nice inflows into the Indian debt markets. And we're seeing a reasonable decline in Indian government bond yields, about 30 basis points, I think, so far this year. So I think that's encouraging also for the equity space. India's macroeconomic problems have passed their nadir. There's slow recovery there. So for longer-term investors, I think these are pretty good entry levels, and we might see a return of the Modi bandwagon. I think ahead of April, that also would be positive for markets.